Financial distress. It sounds scary, right? Like a monster hiding under your bed. Or worse, an empty wallet. But fear not, dear reader. For today, we're going to demystify this intimidating topic. Imagine your finances as a game of Jenga. Financial distress is like pulling out one too many blocks. The tower starts to wobble, threatening to crash down. For individuals, it might mean juggling bills, racking up credit card debt, or borrowing money from friends. But enough with the doom and gloom. By understanding its causes, we can take steps to regain control and build a brighter financial future. Now that we've established that financial distress is no walk in the park, let's talk about identifying the warning signs. Think of it like this. Your finances are sending you smoke signals. Ignoring them won't make the problem disappear. It might just burn the whole forest down. For businesses, the alarm bells are usually loud and clear. Declining sales, shrinking profits, and difficulty securing loans are all major red flags. Imagine a once thriving restaurant with empty tables and a for lease sign out front, a sure sign of financial trouble brewing. For individuals, the signs can be more subtle, like whispers in the wind, or should we say whispers from your bank account. Constantly borrowing money, maxing out credit cards, and delaying bill payments are all indicators that your finances might be headed south. Remember that sinking feeling when you see a bill you forgot about? Yeah, that's your financial distress alarm system going off. Other warning signs include dipping into savings, selling personal possessions, or experiencing frequent overdraft fees. It's like trying to squeeze the last bit of toothpaste out of the tube. You know it's time for a new one, but you're desperately hoping for a few more brushes. But don't worry, folks. Just like there are ways to revive a seemingly empty toothpaste tube, we've all been there. There are solutions for financial distress, too. Okay, so you've recognized the warning signs, and let's be honest, it's not looking pretty. But before you reach for the panic button, or worse, a payday loan, take a deep breath. Remember, financial distress is a challenge, not a defeat. With the right approach and a sprinkle of financial savvy, you can turn things around. For companies, tackling financial distress might involve restructuring debt, cutting costs, sorry, office dog, or seeking new investors. Think of it like a business makeover show, out with the old, inefficient practices and in with streamlined operations and a fresh perspective. Individuals facing financial hardship have options too. Creating a realistic budget, negotiating with creditors, and seeking credit counseling are all positive steps towards recovery. Imagine it like decluttering your home. You're getting rid of unnecessary expenses and creating a more manageable financial space. Remember, asking for help is not a sign of weakness, but a sign of strength and a commitment to improving your situation. There are resources available, from financial advisors to credit counseling services, ready to guide you towards financial stability. So, ditch the shame and embrace the journey towards financial recovery. Now let's talk about the big leagues, the world of corporations and financial institutions. When these giants stumble, the tremors can be felt throughout the entire economy. Remember the 2008 financial crisis? Yeah, not exactly a picnic in the park. In such situations, governments often step in with a safety net, providing bailouts or implementing policies to stabilize the financial system. Think of it like a giant game of Jenga where Uncle Sam swoops in with a steady hand to prevent a catastrophic collapse. However, government intervention in financial distress is a double-edged sword. While it can prevent widespread economic turmoil, it can also create a moral hazard. This means that companies, knowing they might be bailed out, might take on more risk than they should. It's like giving a teenager a credit card with no spending limit, a recipe for disaster. The government's role in addressing financial distress is complex and often debated. It's a delicate balancing act between protecting the economy and encouraging responsible financial behavior. One thing's for sure, when the big guys catch a cold, we all feel the sniffles. And there you have it, folks. We've explored the treacherous waters of financial distress, from its causes and symptoms to remedies and the role of government intervention. It's been a wild ride, but hopefully you've gained some valuable insights along the way. Remember, financial literacy is like a life vest. It won't prevent you from encountering rough seas, but it will help you stay afloat. By understanding your finances, making informed decisions, and seeking help when needed, you can navigate the often turbulent waters of personal finance with confidence. So go forth and conquer your financial fears. Arm yourself with knowledge, seek guidance when needed, and remember, even the most challenging financial storms eventually pass. And who knows, maybe one day you'll be the one offering a helping hand to someone else navigating their own financial choppy waters.